It's called the One Big Beautiful Bill, and it will be the biggest bill ever passed in our country's history.
Hello and welcome back to my YouTube channel. I haven't been posting for the last couple of weeks because I had exams, but now I'm back and hopefully I'm gonna be posting more consistently now. The markets are erupting and it's not by accident. Trump's sweeping new bill, nicknamed the One Big Beautiful Bill, is here and it's reshaping the financial landscape. From Wall Street to crypto, everyone is recalculating risk. Today, we are going to unpack how this bill could boost growth, inflate bubbles, and set the tone for investing in 2025. Just weeks ago, investors were stuck in a fog of uncertainty with stagnant earnings, rising inflation, and global tension. Then, Trump's economic bill hit the floor, which included tax cuts and regulatory rollbacks, which led to a positive upward trend in the financial markets. The S&P 500 surged, Nasdaq increased by over 5%, Bitcoin again was on the rise, and the financial markets started showing a positive trend. And for the first time since 2022, sentiments have decisively shifted bullish. It is a bull run, and the Wall Street sees this as a growth regime shift. Perhaps the most important question is, what's fueling the boom? The bill proposes a historic cut in the federal corporate tax from 21% to 15%. That instantly lifts S&P 500 earnings by over 11% based on Goldman Sachs' latest models. Trump's bill revives the 2017 playbook with one-time capital gain tax combined with a one-time repatriation window could unlock over $1 trillion in corporate cash flow. Expect this to translate into massive share buybacks and special dividends and a flood of cash moving into the US equity and real estate market. The bill also fast-tracks approval processes, trims back EPA restrictions, and relaxes Dodd-Frank compliance threshold for mid-tier banks. This is bullish for oil and gas giants, especially for companies tied to reshoring and infrastructure build-outs. Perhaps the most unexpected thing in the bill is the framework for federal crypto taxation and custody. This bill explicitly protects self-custody rights and also defines digital assets as commodities. This clarity has already sparked institutional inflows into Bitcoin, Ethereum, and projects like Solana and Chainlink. Perhaps the three industries that will benefit most from this bill would be AI and semiconductor industry, mid-sized industries and infrastructure industries, and industries relying on Bitcoin and blockchain infrastructure. Large-cap tech giants like Nvidia, Microsoft, Amazon are already eyeing double-digit earnings through tax cuts. AI chips and semiconductor demands are rising globally, and these tax cuts with incentive for domestic production could turbocharge margins for Nvidia and AMD. With relaxed permitting, Made in America perks, and reduced regulation, industrial giants like Caterpillar and Honeywell are breaking out. This is actually a throwback to 2017's Trump manufactured boom, but this time with more revenue behind it and clearer geopolitical alignment. Crypto like Bitcoin and Ethereum are already up 30% since the information about the bill was leaked. The inclusion, clear taxation laws, SEC limitation, and protection of digital rights has created a sort of green zone for industrial and institutional entry. BlackRock and Fidelity crypto ETF volumes are increasing, rather surging, and we are seeing renewed energy in layer 1s, roll-ups, and payment protocols. But with every financial reform, there's always risk associated. The three most probable risks that are associated with this bill are exploding fiscal deficit, political reversal and uncertainty, and the acceleration of inflation. While markets love tax cuts, CBO estimates that this bill could add about $2.5 trillion to the US debt over the next decade. If growth doesn't catch fast enough, we could face bond market backlash or a return to 6% yield on the 10-year. Several provisions could face prolonged legal battles in courts, and if consumer spending spikes while the Federation is easing into it and the markets are adjusting, which could sort of overheat the economy and cause a rebound of inflation, which could in return cause a sharp reversal in interest rate expectations. Now the question is, where exactly is the money going? Funds are pouring into sectors with direct exposure to tax reforms and domestic investment. Sectors like machinery, transportation, and building materials. Giants like Vulcan Material, Union Pacific, and Tran Technologies are hitting all-time highs. Institutions are also doubling down on crypto giants like Bitcoin, Ethereum, and layer 1s like Solana, and companies that provide Crypto on-ramps and custody solutions like Coinbase, Circle, and even giants like JP Morgan are seeing the benefit. High-yield names in utility, telecommunication, and energy are outperforming with lower tax burden, making dividend income more attractive. Expect a quiet boom in dividend players like Verizon, Duke Energy, and enterprise product partners. Now the final verdict. Is the rally real? Trump's One Big Beautiful Bill introduces tax cuts, clearing red tape, and finally giving crypto clarity. But the price tag is huge, and politics is a game of uncertainty and fragility, and inflation might not sit quiet for long. But for now, the rally is justified and real. But it's a trader's market, not a tourist spot. So my advice is, stay sharp, stay hedged. Now, as we conclude this video, I want you all to share your thoughts in the comments down below. Please hit the subscribe button, and you can always watch my latest upload here. Please keep following for more such videos. Thank you so much for watching till the end. Bye bye.